Ladies and gentlemen, it is officially happening and nothing can stop this event that will happen in 2024. So what event am I talking about? And what are the big risks I see? And I think we're really going to start to see things hit the fan in about 48 hours as people get back from holidays. Probably the credit card bill from December, January, from New Year's and Christmas comes due and reality starts to hit. But also, what event do you think will be the biggest in 2024? Let me know down below. So everyone, this is going to be a very, very important episode. We've got so much news, facts, and data to cover. So let's not waste any time. Let's get straight into it. Okay, first things first is this, everyone. We just got the jobs report out on Friday, and there's a lot of cooking the books going on, making things sound great when it isn't. Look at this. Inside the catastrophic jobs report, record 1.5 million crash in full-time jobs. That's right, they're putting out saying, look at this, we created 200,000-300,000 jobs, and even they created 1 million jobs. It's not about how many jobs you create, it's about how good are the jobs that you create. Are you creating jobs that pay $60,000 to $100,000 a year, or are you creating a lot of part-time casual jobs where you only get $15 to $20 an hour and you're only getting 3 to 5 hours a week? Not only that, but look at this. The economy is doing so great, multiple job holders soared to record. Now, I think this is because of a few factors. One, because of inflation. People are having to get more jobs to keep up with the cost of living. But not only that, again, like I said, these are low-paying, low-hour jobs. So people aren't getting full-time jobs anymore. So they're working multiple part-time jobs, which is much, much worse. Also, native-born workers plunge and more. So unlike the mainstream media saying the jobs market isn't great, yes, there's lots of low-paying jobs being created, but there's not much good-paying jobs like before. Now, not only that, but look at this. Yellen declares US economy has achieved a soft landing. Well, did she just jinx herself? And normally, you can't believe what they say because she's paid to literally say everything's fine, everything's great, the US economy is the best economy ever, we've never done better. It's her job to say things are fine. Look at this. She says real wage increases means American workers are getting ahead. That's not true at all. With inflation, people's wages are going backwards. Well, she's done this before. Look at this. In 2017, Yellen said she expects no new financial crisis in her lifetime. Well, since 2017, we had the repo crisis in 2019. We had the greatest economic contraction in 2020 with the lockdowns. We had the stock market crash in 2021 and 2022 of around 35% for the NASDAQ, and we had the banking crisis last year. So she doesn't have a good track record, everyone, and this next story proves it. So look at this. US bankruptcies surged 18% in 2023 and seen rising again in 2024. Now, what people need to know is what I've been talking about and what many economists talk about is the lag effect. The Federal Reserve has been lifting interest rates aggressively and have been lifting them very, very quickly. And like I said, it will take 12 to 18 months for us to start feeling the full effects of these rate hikes. Well, we're starting to get the data now. People are really feeling it now. A lot of their savings has been depleted. Their credit cards are maxed out, like I've shown you and I'll show you in a moment, and they simply can't take it anymore. And this is all going to come to the surface in 2024. Because look at this next story. Only half of Americans believe they can pay off their December credit card bill. Unfortunately, a lot of people would have tapped all their Christmas presents on credit cards or the New Year's Eve celebration. And again, it's all going to come to a head in 2024. But not just the financial markets we need to pay attention to, we also need to pay attention to what's going on with the geopolitical situation. It's getting much, much worse, and look what China just did to the US. So China to sanction 5 US manufacturers over arms sales to Taiwan. So we all know in 2023, the situation with Russia, Ukraine's getting worse. We have the conflict now with Israel and Hamas. We have tensions boiling at the Red Sea. There's lots of Red Sea attacks on shipping containers, which I'll go into in a moment. And I think the situation between China and the US will just get much, much worse. And look at this next story. What we have to pay attention to is not just what happens in the US, but what happens to economies around the world. And the second biggest economy is China. And unlike the GDP data they're putting out, that is not true at all. Their economy is imploding. You have to really look at foreign investors because foreign investors are the ones that Either get paid or don't. So if foreign investors aren't getting paid, well, things aren't good. Look at this. Troubled China shadow bank Shangji files for bankruptcy. So court accepted case after firm said it cannot repay debt. So we're seeing a banking crisis in China. We're seeing a real estate crash. And there is an economic crash and a jobs market crisis, especially for youth. I think there's like 30% unemployment rate for the youth in China, but they're covering up. So that's why you have to follow the money. So Shangji revealed a shortfall of 36.4 billion. So all these banks going under in China and foreign investors not getting paid will have domino effects. Now, this is a potential black swan event for inflation. The Federal Reserve made a huge mistake by declaring victory on inflation, while this is going to add much more inflationary pressures. Look at this. A Red Sea attacks bring risk of high prices for Americans, Biden officials warn. So inflation remains political liability for Biden to be re-elected, and that's exactly true. This is going to make shipping costs more expensive, and they're simply going to increase the cost of goods to offset this now new route that they're having to go all the way around Africa, which is much more expensive. It may have not had an impact on energy prices, but it will impact your shipping costs. But I know what you're thinking, well, we've had so much risk over the past 40 years and everything seemed to be okay. Well, do you know why things have only seemed to go up over the past 40 years? It's because of a very unusual cycle we've been in, but that cycle is now over. Because look at this. This is a chart of a 10-year US Treasury bond yield, and this is the reason why we've been in a 40-year bull market or a 40-year cycle. Yields have broken their secular downtrend. So we've seen interest rates every time there's a recession just go lower, lower, and lower. But now that trend has reversed. And if we still have inflation surging, the Federal Reserve won't be able to cut as aggressively as they have been able to do in the past. They may do a little bit of cuts, but they're not going to have the same room as they had in the 80s when they could drop interest rates from 10%. So this is a huge change of the times that we're going to be going over the next 10 years. Now, another thing the market's very bullish on is Fed cuts. And if the money printers do go burr and the dollar collapses, yes, the stock market will go up in dollar term, but we need to be careful what we wish for, because if we do see cuts, look at these gray lines here. There's always been cuts when there's a recession. The red is the interest rate cuts they did during a recession. So all these people saying, yes, Federal Reserve is going to cut, they may be cutting for a reason you don't want them to. And look at this chart. Again, we've spoken about this before. Be careful what you wish for, because not always when the Federal Reserve cuts is it bullish for the stock market. We can see here during the Great Financial Crisis, the stock market crashed 50%, and it didn't bottom until 18 months after the Federal Reserve started to cut interest rates. Again, the dot-com bubble, it crashed 38%, and it did not bottom until 21 months later. The 1973 recession, when we had very high inflation, it crashed 41%, and the market didn't bottom until 11 months later. So like I said, the markets better be careful what they wish for, because the only way I see inflation going away is if we have a full-on economic depression. And yes, the Federal Reserve may cut, but they may cut into a deep economic contraction, and it may not be enough to save the stock market. Now, look at this next chart here, everyone. This is absolutely insane. So the 34 trillion national debt is roughly the value of the economies of China, plus Germany, plus Japan, plus India, plus the United Kingdom. This is absolutely insane how much debt the US government has, and this is the real reason why the Federal Reserve is pausing, and the real reason why they will cut in 2024. Not because inflation is over, it's because the US debt is bankrupt and can't afford to pay 5 or 6% interest on their $34 trillion of debt. So everyone, I know you're thinking, okay, there's a lot of risk here, but how can we protect ourselves against these big economic headwinds that will be coming? Well, you know what I've been talking about. You need some gold, you need some silver. Gold is in a great bull market right now, but another play where you can get potentially higher returns is in the commodities market. Now, when gold reaches an all-time high, normally we see a commodity boom, commodity bull market, and other commodities tend to surge. And a commodity I've got my eye on right now is uranium, because I don't know if you've been looking at the charts lately, everyone, but uranium has just hit $91. It's nearly doubled just over the past year. And we look at the 5-year chart, it's gone from $24 all the way up to $91, nearly a 400% return. Now, like gold and silver, you can get some pretty good returns with gold and silver, but if you want to get even greater returns, you can diversify into miners. It's the same thing with uranium. And that's why I want to talk about today's video sponsor, Ather Energy Corp, that's stock ticker symbol SASKF. Because people, I just got a report on the huge moves that they've just done, and it's absolutely game changing, and you need to pay attention to what they're doing. Because again, uranium is in a remarkable bull market. It's increasingly recognized as a transitional metal essential for bridging the gap between fossil fuels and renewable energy sources. Now, while renewable energy is vital for a sustainable future, their reliability and implementation pose significant challenges. Uranium, known for its incredible energy density, one small pellet can produce a vast amount of energy, which is emerging as a stable and potent energy source. Now, this market shift is more than just about energy. It's a reflection of a global geopolitical and economic strategy. In the wake of recent global events like the Russia invasion of Ukraine, the Red Sea conflict with the Houthi rebels, there's a noticeable shift from globalization to deglobalization. Nations are reevaluating their dependencies, focusing on bringing crucial resources like uranium in-house or sourcing them from trustworthy partners. This trend elevates uranium from a mere energy source to a key element in national security discussions. So let's zoom in on Ather Energy. They have made a significant move by staking the largest land package in the Athabasca Basin. This is an area renowned for its high-grade uranium. So following their strategic acquisition of 92 Energy and Latitude Uranium, Ather will boast an unprecedented $65 million cash position, and this financial strength positions them to effectively pursue their ambitious exploration and development plan. Now, you won't believe what they did in 2023. Ather conducted the largest electromagnetic scan in the history of the Athabasca Basin. This forward-thinking approach is paving the way for targeted exploration activities in 2024. Now, their business model is notably innovative. They're planning to farm out their exploration projects, allowing other companies to take on exploration risk, while Ather retains substantial royalties and stakes in these projects. It's a strategy that minimizes risk while maximizing potential rewards. Now let's talk drilling and why this drilling phase is so important in 2024. Well, when a company like Ather starts drilling, they're not just digging into the ground, they're unlocking potential value. Good drilling results can dramatically change the company's outlook, indicating the presence of valuable uranium deposits for investors. This is where the magic happens. Successful drilling results can be a game changer, potentially increasing the company's stock value significantly. Now let's get into the juicy part, the potential of returns. While traditional investments like the S&P 500 offer stable and steady growth, companies in the exploration sector, like Ather, offer the possibility of exponential returns. We're seeing companies in the past where successful exploration and drilling results have led to companies increasing in value by 50 to 10 times. These aren't just regular returns, people. We're talking about potential life-changing financial growth. This comes with risk, but the upside potential is enormous. Now let's talk about financials. Ather is in a robust position. Their substantial cash reserves post-acquisition gives them a significant edge over other explorers in the market. The Anglagak deposit in the Theo Basin, a high-grade uranium deposit, is a key asset with great potential for further exploration. In a central mineral belt, Ather's acquisition of C&B Discoveries aligns with their strategy of securing areas with proven potential. This approach has been successfully adopted by companies like Paladin, whose stock saw significant growth thanks to similar strategic moves. So I know everyone, what you're thinking, okay, what does this mean in simple terms? Well, to sum it up, understanding the critical role of uranium in a new global energy landscape is key to recognizing Ather's potential. With their strategic acquisitions, impressive land package, and expertly planned exploration strategies, Ather is poised to become a leading player in a market that's just starting to unfold. So everyone, again, you need to start doing your due diligence on Ather Energy today. That's stock ticker symbol SASKF. Remember, all investments involve risk, so go ahead and do your own due diligence. Thanks for Ather Energy for sponsoring today's video. Now back to the content. But everyone, what do you think? What do you think will be the most significant event in 2024? Let me know down below. Now, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.